Welcome back. The RBA pointed the finger at investors for driving up the Sydney and Melbourne property markets and thereby intensifying potential macroeconomic risks rather than direct risks to the stability of financial institutions in its financial stability review. But while there are ways the central bank might dampen residential price growth, big questions still remain about what role foreign investors are playing in the property market and what should or could be done to stem the flow of foreign money into the country's residential hotspots. For some insight into this matter, Bill Nikolouzakis, Director of Nyko Property, a Melbourne property research house which also sells new property, joins us now from our Melbourne studio. Bill, thanks very much for joining us.
Hi Helen, how are you?
I'm well. Now, what do you take from the RBA's concerns expressed about the risks to macroeconomic stability? Is it likely they'll move to introduce some sort of credit growth restrictions for investors?
Look, I think that's always a possibility for them to do that. Although I think at the moment it's a bit early in the cycle to really be looking at those kind of measures. I think we're at a point now in the property cycle where if it continues at this level, and it is hot, there's no doubt about that, if it continues at this level for another year or 18 months, we definitely will be in some kind of bother, and they might need to do something about it. But at this stage, I can't see them doing it. I think maybe those comments were brought out at the right time just to calm everyone down a little bit.
OK, so would it be something like increasing stamp duty, or would they try and put the sort of the dampener on bank lending?
Look, I think stamp duty would be the wrong way to go about it, because that restricts people that need the assistance to buy property in buying that property. I think the right way to go about it would be going through the banks and maybe tightening up some of the lending guidelines which have been tried in other countries such as Sweden and worked really well. So I think that would be the next step if they were to take one. But like I said, I really don't see that happening in the near future. Now,
foreign investors clearly play a critical role in Australia's residential property, but are they hurting the residential property market at all, in your view?
Look, I think there's a common misconception about what foreign investors can and cannot do in Australia. By law and under the current legislative framework, they can't actually buy existing property. They can buy off the plan and new property.
So let's just step back. You're talking about somebody who does not have residency in Australia.
Correct.
So we call them a foreign investor.
Yes.
They are not allowed to buy existing property at all.
No, they're not. The only time it's permissible for them to do so is if they're a resident of the country, and even if they're temporary residents, they need to sell that property when they leave. Now, there's two things that we've got to cover here. The first thing is that they can't do that. The second part of it is that we know anecdotally that some of them are doing that, and the policing isn't sufficient to protect against that happening.
Sorry, some of them are doing what precisely?
They're doing what is not legal, and they're buying property, existing property at auctions and in private sales when the current legislative framework doesn't allow them to do that.
All right, so are they basically making up a residential address or somebody else is covering for them?
Yeah, well, Kelly O'Dwyer recently came out and touched on this subject, and she was saying that a lot of them either use a professional in Australia, an accountant or a solicitor, or a family member who may be a permanent resident or an actual citizen of Australia to fudge the documentation and make it look like they live in Australia.
OK, so you're saying they're getting around the current legislation, the rules. Is it FIRB's job, or whose job is it to police this?
It's certainly FIRB's job, and that's probably why the scathing criticism came from Kelly recently. But
Kelly O'Dwyer, you're talking about Liberal MP,
Kelly O'Dwyer,
yes?
Yes. Look, it is their job, and it hasn't been happening. Now, they'll tell you that it's because of under-resourcing, which may well be true. What came out of the current review that the Economics Committee did, which we were part of, was that there might be an opportunity to charge foreign investors, all foreign investors, even the ones doing the right thing, a small fee to participate in that, which will go towards the FIB team and building up the policing, which really needs to happen.
OK, so would you in general, though, if the law was not being flouted, are you in favour of foreign investors being allowed to invest in the property market? I mean, how much does it sort of underpin residential, say, the construction side of the industry?
Look, it's a very good point. The construction side of the industry in Australia is 9.1% of the entire workforce. So we're talking about a big chunk of the workforce. And most of these people are building properties that are being bought either by local investors or in most of the CBD and surround type buildings are being bought. A lot of them are being bought overseas. So I see it as a positive, definitely a positive from that standpoint. I think we need them, and they're assisting us in building the infrastructure and the types of property that we're going to need to build the cities that we know work so well in other countries, with people working closer to their home.
Yeah, so are foreign investors essentially buying up all or most of the inner city apartments, the new ones that are being built in Sydney and Melbourne?
Look, they're buying, from anecdotally again, I've seen that they're buying a large portion of them. I wouldn't say, most of them, but a very large portion. If I had to hazard a guess, I'd say at least 50%. And it's the kind of property that our clients, for instance, and Nyko as a company wouldn't recommend as an investment in Australia. But at the same time and in the same breath, it's a type of property that in the future, in 10, 20, 30 years' time, we're going to need in Australia. We've already got infrastructure problems, and we all know that the way cities are built in the most efficient way, people live close to where they work. So I think the foreign investors are definitely helping us by helping us build the infrastructure that we're going to need as the population grows.
All right, just back to if they are flouting the rules. I mean, how can FIRB possibly go around to all the auctions and all the sales of all the real estate agents and check whether, the person has the correct visa or if they really are a resident here, if they are buying an existing house? I mean, it seems extraordinary unless there's some central registry that the estate agent has to go through with FIRB.
Yeah, look, I was asked the same question in the hearing, and it's going to be very difficult. I think FIRB came out and said that they'd need 800 people looking at that if they wanted to cover every property transaction, which is obviously not going to happen. Look, there is some other ways, but there's no solution that I know of that would work perfectly. The easiest solution would be to make solicitors accountable through the conveyancing process, but a lot of the time people only go to conveyancers after they've bought a property. So if they bought a property, they've done the wrong thing, then we might have a seller who's going to be out of pocket or at least delayed in selling their home, which is obviously a negative. Yeah,
so do you actually believe that the legal framework as it stands now is strong enough?
Look, I think the legislation, the way it is now, works really, really well. It encourages them to invest in the property that we want them to be buying, the new property, and assisting our construction industry. I think the issue with it now is finding a proper way to police that, and I'm sorry to say I don't have that answer right now, but there needs to be something done in the policing side of things, that's for sure. All right, so what would happen? What would be the repercussions, I guess, if there are more restrictions on foreign investment into residential property? Look, depending on what the restriction is, I think a small fee going towards to assist with the policing wouldn't be a holdback at all, or a pushback. I don't think a foreign investor for a $2,000 or $3,000 fee or a $1,500 fee would change. Not one foreign investor that I know wouldn't go through with a transaction for a fee of that level. But if we were to change the laws to make it a lot more difficult for them to buy the properties that we want them to be buying and investing in, I think it will hurt our cities and overall our property market. All right, and, needless to say, our construction industry. Yeah, and just anecdotally, we hear that it's all Chinese buyers. Is that your experience? Look, I think the majority are Chinese buyers. We don't deal a lot with overseas buyers, but we've recently been approached by an Indonesian firm who's opened up 2 offices and licensed our name in Indonesia, and we've been up there a couple of times since, and it's definitely got a lot of interest in Australian property from Indonesia, with people who want to diversify their asset holdings into different countries. All right, Bill Nikolouzakis, we'll leave it there from Nyko Property. Thanks for joining us. Thank you very much. And now